All right, we're back. It's Saturday, May 20, what is it, 3rd. This is going to be a little education on different indicators to use. This is stochastics, Investopedia. It's a technical indicator. What is it? It's an accurate buy and sell indicator. In the late 50s, George Lane developed stochastics as an indicator that measures the relationship between issues, closing price, and its price range over a predetermined period of time. To this day, stochastics is a favorite technical indicator because it's easy to understand and has a high degree of accuracy in indicating whether it's a time to buy or sell security. Key takeaways: stochastics are a favorite technical indicator because it's easy to understand and high degree of accuracy. Stochastics are used to show when a stock has moved into an overbought and oversold position. It can be beneficial to use stochastics in conjunction with an oscillator like relative strength, indexed RSI. Let's take a look at some charts here, some images on RSI. Let's see here. All right, so RSI, you can see in this chart here, you had to move down and see where it was here, and it came all the way flushing down. So you have 80-20, 80s overbought, 20s oversold. So you definitely want to buy here, although you could keep going like straight this way, and then it is, dead in the water. Some stocks will just keep going that way. So it can be oversold for a while, and it can be overbought for a while. So this moved up, and look at the nice move here. See, blue over red is bullish on this chart, and that was a nice move. Then it came back down. There's a small move here, and then the official move again under 20 here, and it broke back up. Now see lines crossed overbought, oversold levels, and you had a move here and went straight up. So generally, see the area 80 indicates overbought region, while 20 is considered oversold. And let me just straighten here. Cross signal occurs when two lines cross. So here, see the blue line over the red line. Divergences from a new high or a low in price are not confirmed by the oscillator. Bullish divergence forms when the price makes a lower low. But stochastics oscillator forms a higher low. This indicates less downward momentum to foreshadow a bullish reversal. Bearish divergence forms when a price makes a higher high, but the stochastics oscillator forms a lower high. This shows less upward momentum. That could foreshadow a bearish reversal. Now see here, the price was going down, bullish divergence. But even though it was going down, eventually it's going to go back up. And then see here, you had a divergence here, higher, and came back down. See right here, the low was higher each time, then it broke up. So you can look for little things in that area, and there'll be different situations that'll help you here. Let's see what this chart is. So here you have a chart, and stochastics fast and slow. There is a fast and slow oscillator. See, here's a slow line, and it came back. A slow line is going to be a little slower to the move, and it came from 20 to 80 here. See right here, and I guess this is a faster one. Smoother with less false signals, and it broke up, and then it came back down here. See again right here. So you're low, below 20, and it broke up. Let's see what else they got here. Here's a stochastics fast chart. Way down here, this is way below 20. Look at the bounce here. That's a nice bounce. Then here, another bounce. Buy, bounce, buy, bounce. So it definitely works. Just a matter of your time frame. And this is the slow region, slow stochastic. You had to move here, and then all the way up, and then buy all the way up, and then buy all the way up. So these were really good buy points. You got good range. Sometimes they might not move that fast. They might put in, like, see this little edge here and come back down. It could give you false signals. So, and here is stochastics fast and slow. When this stopped, this thing went up, and you form a line here, just kept going straight in this line. It was a great move. And then you had below 20, then up, and it was forming this really tight triangle. Then on this, it's probably going to crash here. he wants to form this tight rising wedge. And let's see here, on this chart, you had to move up, and then came back down, then you had a higher low, or lower high, excuse me. And then eventually, see here, at this point, it's above 80, and it came back down, then back down again. And then you had a divergence right here. So the low was getting lower, and then eventually, on this, see the low was getting higher. So the price was getting lower, and you're like, oh, it's going to keep going, but the divergence was going up. So when you see the divergence going up, it's bullish, extremely bullish, and it went up. All right, what else we got here in these charts? Let's see, there's some good charts here. Let's see. Looking down here to see what this chart is. Here's one S&P. I guess this is pretty recent, so you may. So this is actually longer term S&P, and see this here? When this line get up this high, and then you saw that move down here, stochastics went down. Then look how this went down, and stochastics really crashed down here. And you had a few bounces. This is a fake bounce, and it was not the time to get in there, and then went back down again. And look where it is now. From now on this chart, April went all the way up to May, and as far as this is May 1st, and see how this was moving down, divergence here, but the chart was getting higher and higher. So there's different ways to look at stochastics too. So, all right, what else do we got here? Let's see some other charts here. See this one. This is a daily FX chart, Euro stocks, I believe. So when this was formed, a nice little move up and start to fall down now. Got below 80 or 20, excuse me, and went sideways. And see, this formed a double bottom, 1, 2, and then took off. So this made a W move and came back up and really took off. And this small move down, and then went down here, and then this broke up. You see these moves here, and this was a real good one, and so was here, and you got a nice gain there. And on this, we're giving you arrows where to exit position. So on this, they said get out here because the move happened fast, and see this didn't move a lot, and then it came back real hard, and then it came back up again and took off after the second time. And then right here it was a little bottom here on 20. And then it really broke out, and they told you to get out. And then again, to get out right there. So different ways to play it on that chart. Let's see what we got here. Looking for some other good charts to show you. See what this chart is here. Economics, India Times. So it's here. All right, see in this chart, coming up, and see on this was higher. See, it doesn't have to be 2082. It crossed over right in the middle here. There's a crossover right at 95, and then went up, and your exit was right at about 105, 107. Because see this line here, it's hard to see here, but crossed over, crossed down, and then you had another move here, and then it's starting to go up a little bit here. So watch the cross of the lines. That's really important too. Let's see here, stochastics. Looking for a chart here. Is there a chart? Here we go. So on this chart, it's a downtrend. You're going down, 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 but you have a divergence here. So it first move up here, it showed in the middle of this downtrend, start to go up, then back down. But see the low is getting higher here, 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 and then bounce through and really took off. See right here on stochastics, that's bullish. And then eventually start to go back down here. So All right, what else do we got here? Let's take a look at this chart. All right, so here, all these pop-ups. So in here, this chart came down and then nice move up here. And you got your divergence was down, but stochastics was up. And then this was your sell signal. Again here, sell signal, buy signal on December 24th. I think this is, I guess this is SPY. And it took off, look at that. And see how this stayed above 80? Look at these moves here. There's never a sell here. Little move here, probably fake people out. And then you had a move here, which really went down. You probably would have sold here and then got back in right here. And then it took off again. So that was a nice long term of a SPY. And here's back, a closer look here. So you have your move up, sell, sell, buy right here, December 24th, and then took off, and then buy right here, and then took off. All right, so that was a good showing of that on how that chart works. Let's see what else we got here. Let's see what this chart is. Blizzard indicators. That's not a good chart. Let's get out of here. Let's look at, trying to find something good here. Let me go back up. Let's take a look at this chart. Education, how the market works. It's not a good chart, it's too small. Let's take a look at this chart. All right, so here's the chart right here. So stochastics going up 20 to 80, and see how this is eventually crossing down, and then that's your exit. So you exit here, get out, then back up, down, back up. So that was a quick little read on that. All right, see this chart. This looks like a good chart. Loading here, loading, 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 loading. All right, so here, this is a downtrend chart. See this down? Then right here went up and then back down. See this never reached over 50 though and came back down and continued oversold. And here's another chart here. Downtrend. Now right here was probably like, started from these green candles and went up, and you're like, oh, it's going to go back up. And there was a real fake out here. So you note the modest, now, note how the modest price move is yet. This has been enough, but stochastics into overbought territory. So you came up right here. It was overbought, and then that was it, and it flushed down. So this wasn't a big move here. Sometimes it's a small move. Say it was very fast. This went 73 cents to like 73.10. It was nothing, really nothing move. Here's a move here, 125, 124, what's that, 8. And then this one rocketed, it took off all the way up. And then came back down here at 126, and then took off again, went up. So different charts will show different readings. Could be a big move, could be a smaller move. Let's see what this chart is. And there's one here, came back down. And look, this is going up, divergence. And right here, that's when you get out. See here, this was the top. These like head and shoulders almost, and this went down right here on that 2, this number 2 this guy has. And then it came back up again, and it came back down on this line. And it came back up again. So each time was a divergence. See here, there's a line here, and a line here. And then divergence was down, high, lower high, lower high, lower high. So that's how that works. All right, so stochastics is a real good indicator. You can do swing trading, day trading. 80 is overbought and can stay overbought. 20 is oversold and stay oversold. But the most part, if you buy at 20, depending on the stock, even if you want to sit on it for a few weeks, even a month for a swing trade, it'll be probably be more profitable than buying a stock at 80 on the indicator. So just remember that 20 could be bullish and could be your next turn. The stock's going to go up. Then once it's at 80, it could be going down. So stochastics is a great momentum indicator, and I like to use it day trading, swing trading, and give it a shot. And that's it for now. Please subscribe to the channel and like. And we are out. Peace. That is it.